Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris from Elite Currency, and we're going to take a look at the last few days in April. For the euro dollar, first of all, 4-hour chart. So price making a retracement as we expected. On Monday, we said that this is looking like a pretty strong momentum, and we thought there could be a flag and a breakout higher. Now that didn't happen as yet. We did have a retracement that was quite mild, but we didn't get the follow through as yet. So the question is that still going to happen? Will that still take place? And I don't think so at this moment. I think that the patterns are not confirming a continuation higher. I don't think that the price action is looking like that. If it were, it would look different to me. I would have liked to see something like this, for instance. And that could have been something more interesting for a breakout higher. At this moment, I just don't think that the price action is looking set up for that. Looking at the relationship of price versus the 21 EMA, in fact, I think it looks bearish. I think that the lack of price moving up here is quite weak and finding resistance. It seems like an ABC pattern to me, like that, which means that if that's an ABC, that this is probably wave 1 or A, and that we're probably going to get a follow through. You might say, okay, this could be C, this is going to be A, B, C finished, right? And therefore up. And I mean, you cannot rule out anything, of course, necessarily. If that is so, then price would have to break above the 20MA and this 121 region. But I don't expect that. I think that the deep retracement to the 61.8 fib and a quite flat reaction here, it's more likely that price will make a downside. And I think that looking at the bigger picture, 4-hour chart, for instance, I think that this is basic exhaustion after a lengthy uptrend, and an uptrend that we've been following closely. And I would say mostly at correct, except the last higher high. So it looks like 1, 2, 3, 4, 5 pattern is completed. Within wave 3, we had a clear 1, 2, 3, 4, 5 pattern. And with 7, I think, is going to be the end station of this. Now, the confirmation of that would be, in my view, the break of this support trend line, the break of these two fractals, and the close below the 21 EMA zone. That would confirm it. So this is my best guesstimate at this moment, that we're going to get a bearish follow through and retracement, although the trend is up. So it's a reversal analysis, and always more riskier because of that. Therefore, if we get the confirmation here, it would be pleasant. And once again, that confirmation is a break and close on the 4-hour chart, I think, in my view. And in that case, because of the divergence pattern also visible, the 5-wave pattern seems completed. With the break, I think we're going to go at least down to the 144 EMA. Plus, don't forget this fib we've been drawing on the chart for a few times already. The 61.8 fib was already on our radar before. First, we thought the 50 fib might be the bouncing spot, but price action was too strong at that moment, so we thought, okay, there's going to go a follow through this 61.8 fib. It missed it here. I thought it was a tag, but it went up to really tag it, and now I think that fib could stop price, and we could see an ABC down. This could be wave A. Up, it's clearly one push up. It's clearly one momentum, one price swing. So that could be an A or 1. I think an A, because we have an ABC here. So I think that up, I think we're going to get a bigger wave 4. Let me say it this way. So this is probably a red A. We got a blue A, B, C within red B, and then down for red C of let's say green 4, for instance. So within blue B, I suspect we're going to get a red A, B, C. So I think that the analysis we've been mentioning for the past few weeks about an ABC up is going to take place, and an ABC down within blue B. Main target of the ABC down should be, I think, this head and shoulders level here, left shoulder, head, right shoulder, inverted head or shoulders. So let's put the fib now on the upside to see what the targets could be. 61.8 fib and the 38. First the 38 for wave A, up, and then down for wave C like this. ABC. So let's go down to the 4-hour chart, and you can see the 38.2 fib nicely lines up with those long-term moving averages. So a break below the 21 EMA should see a space down for about 100 pips, I guess, plus minus. Then an ABC up could be stopped by the 21 EMA. That should flip down by that moment, and then we should see a push down to the 61.8. That's what I'm expecting at this moment. Now, what if price breaks through this? Of course, if it breaks through the 21 EMA zone on the 1 hour chart for the second time, or maybe even third time, and there's a flag, then I would consider the fact that there's still one more upside remaining. Then it's still possible. In that case, it could be wave 1, 2, 3, 4, 5. And I would change my view on that at that point. But it would have to be a break, and there would have to be a flag. Maybe not even a flag on this time frame, but a 50-minute chart could suffice, could be enough. All right, so... But otherwise, you can see here the weekly charts, definitely 3 bullish candles. That's a bullish candlestick pattern on the weekly chart. So I think after the retracement, a follow through to the upside should happen, should take place, maybe even to the previous top here in the minus 61.8 target without breaking that candle low of the lowest, the candle low of the first bullish candle, I should say. So ultimately looking bullish in the long run, I think, with another swing up. All right, but first ABC down. So in my view, shorting ideas below the 28 to the 38, then shorting ideas after ABC completed, and long ideas from here. That's basically my my viewing point. Pound USD remains messy. I'm not a big fan of the pound lately, as I've mentioned before. I did like the ABC up. That's something I thought was interesting. The wave C specifically, and the bounce. I think that was a good trade. That seemed quite likely. But now it's a little bit stuck. I think that, yeah, it's running into resistance, but it's not moving down too much either. The 61.8 fib, as you can see here. But the downside was quite strong. The upside is quite weak. So I don't see the upside taking place quickly at this moment. So if I had to choose on the pound dollar, although I think it's quite ugly price action here, downside seems slightly more likely. I mean, there are reasons for long setups as well, don't get me wrong. There are a lot of support zones here, and I could see some, some long trading ideas emerge from that, using that support as a base for upside. The moving averages are all aligned to the upside. So, plus we have some strong support trend lines coming in. So I think there are reasons to find trades to the upside as well. So that's why I don't like that particular spot that much, because there's strong momentum, but there's strong support as well on all time frames, the 1 hour, 4 hour chart. And this could be tricky. It could make a bounce up to hit with 6 and then move down as a bigger kind of ABC pattern like that. So I don't particularly like any trade ideas at this moment, very simply said. I think that if anything, maybe a short from with 6 or with 7, a reversal trade if it gets that far, or maybe the break to the downside followed by a flag and then a continuation could also be something to consider. Maybe a riskier idea. I don't even like it that much. I'm not even going to talk about it. I don't like it that much myself. I guess a break to the upside followed by a flag on a 15 and up could see it move higher. At least to that with 6 level on the 4 hour chart, as I mentioned, at 139.80, 75. Yeah, that's about it. I wouldn't. This is quite messy. I just don't see much trade opportunities in this zone. Quite conflicting signals, and yeah, I would rather wait. As you can see, all the moving averages are aligned on the daily, on the 4 hour, 1 hour. So a lot of support. That said, the upside is quite choppy and the downside is quite strong. So I'd rather wait for breakout and reversal ideas higher, or breakouts basically. All right, that's it. If you like our analysis, I would certainly appreciate your feedback on Forex Peace Army or Trustpilot if you haven't done that already. If you did, big thanks. If you didn't, I would definitely appreciate your opinion on that. As you know, we are trading the markets ourselves with multiple EAs, so we are putting our neck on the line, and our accounts are mostly up, some are down, but we never had any accounts blow up, and it is certainly possible that that could happen at one point because it's high risk, it's high leverage, and I understand, traders that get frustrated uh, about weaker results, but there are many, I think, websites that just focus on education and not mention their results, not show my FX book, and we do that, and I think that um, it's good from us that we do that, and it doesn't guarantee positive results though, but we do always do our best, and that's why we're going to move into a portfolio approach where we have multiple EAs, so that the risk and drawdowns are lower for ourselves and for those that wish to trade that basket of EAs with us with their risk capital, of course. So I think we're always using the feedback from ourselves and from you to improve. And if you agree, I would definitely appreciate your opinion on that on these two websites. All right. In any case, wish you all great trading. See you next week, of course, in May. Oh, and one more thing I forgot to mention is, of course, we have, but it's important, we have the FOMC statement today and FOMC press conference. So that's, of course, and the federal funds rate in the US. So that is, of course, an important event that could impact price either way. And price could be quiet until that event and volatile just before, during, or after that event, typically, on average. So be aware of that. In any case, we're going to review April next week in our live webinars and videos. So see you soon. Cheers. Bye-bye.